Hi class, welcome to week 4. Hopefully everything is going well. This week we're going to talk about the REA approach to database modeling. The objectives for the class is to recognize the economic foundations of the resources, events, and agents model, REA. We're going to understand the key differences between the traditional entity relationship, ER modeling, and REA modeling. Understand the structure of an REA diagram, be able to create an REA diagram by applying the view modeling steps to a business case. And we're going to be able to create an entity-wide REA diagram by applying the view integration steps to a business case. So let's see what the REA model is trying to solve. So we have a problem, before when people made systems, they made it only so that it could support GAAP. Everyone knows GAAP is, what our financial statements are based off of. So this REA approach, you're trying to integrate things that are for GAAP and other information that management needs. So that's why this REA system was created. And, it's also so that multiple users can view this and get the information that they want. So an REA model is an accounting framework for modeling critical resources, events, and agents and the relationship between them. And of course, as I was saying before, it can do accounting and non-accounting data as opposed to earlier things that only did GAAP based. So an REA model is a unique version of an entity relationship diagram, but it has 3 entities, as we can see: resources, events, and agents. So what are economic resources? The next page we're going to talk a little bit more about economic resources. Normally, paying out cash as an economic resources is easy. So objects that are scarce and under the control of the organizations, as I said, cash, used in exchanges and increased or decreased by the exchange. So events fall into 2 groups. There's economic events, affect the increase or decreases in resources. And there's the support events that control planning, management, that relate to the economic activity that do not directly affect the resource change. So basically, the things that management wants to see, the planning and the budgeting, the things that management wants to see. But it's not necessarily accounting related. And what are the agents? Agents are the individuals or departments that participate in the economic and support events. Each event is associated with at least one internal, so within the entity, and one external, outside the entity. So exchanges are a pair of economic events, duality. So that means like you're giving something to get something. So you're in the t-shirt business. I'm going to give you money in order to receive a t-shirt. So that's all that means. We're going to give and receive. And so examples of give and receive events. So you're selling inventory. When you sell inventory, or like selling a t-shirt, you get cash. So revenue cycle, expenditure cycle. So now you're the one paying the cash, and what are you getting? You're receiving inventory. So you can kind of look at this and see what are give and receive events. So differences between an entity relationship model and an REA diagram. So entities. One class in the entity relation diagram determined by cardinality and readability. Cardinality is just like the relationship. Is it a one-to-one relationship between entities? Is it a one-to-many relationship? That's all that cardinality means. And then we've already talking about the REA. Also, we're gonna there's a difference in the sequencing of events. The ER diagram, just a static picture of the underlying business, and REA focuses on sequence of events. There's also a different naming convention for the entities. So you can kind of see in this diagram how things flow for, the resources, the events, the agents. So, creating a diagram. So what do we first have to do? We have to identify the event entities. So this says at a minimum, it must include two economics, so give and receive. We've talked about what give and receive is. It could include support events, but focus on the value chain. So basically order of operations, how things work and in what order. Events that do not add value should not be included. Funny enough, they say bookkeeping, I guess back office type events should not be included. So we're going to identify the resource entities. So each event must be linked to at least one resource entity whose economic value will either be reduced or increased by the event. Economic events directly affect resources. Support events indirectly affect them. So this is the arrangement of events. Like I said, it's like order of operations. Everything has to be in the order in which things occur. So step 3 and 4, you're going to identify the agent entities. So each economic event entity in an REA diagram is associated with at least two agent entities, one internal agent and one external agent. So we're going to determine the associations and the cardinalities, which just means relationship, one-to-one, one-to-many between the entities. Association is the nature of the relationship between two entities, represented by a label line connecting them. Cardinality is the degree of association between the two entities, which I kind of described that before. So this is a model showing the events, the resources, and the agents. So this is pretty cool. So, for example, a resources inventory. Events verify availability. The agents, the customer service clerk, and the customer. So one is the internal agent, one is the external agent. And you see for each of them, it does do what is an internal and an external agent. So this is those that one-to-one, that's saying it has a one-to-one relationship. M just represents that, there's many relationships. So this whole diagram is, as I said, really talking about cardinality. Discussing more about cardinality in the REA diagram. So many to many associations must be reconciled. That's still talking about cardinality and the relationship between the two entities. So the solution is create a linked table that contain the primary keys of the associated tables. When modeling traditional ER diagrams, convenient to include the linked tables in the model so that it closely reflects the actual database. So here it is, linked tables in an REA diagram. So we're going to view integration, creating an enterprise-wide REA model. So what are we going to do? We're going to consolidate the individual models. Redundant event, agent, and resource entities collapse into a single entity where possible. So in this thing, we're also trying to make things as efficient as possible. And that's what really helps when you do this REA model, because you can literally see where there's inefficiencies. You're going to define primary keys, foreign keys, and attributes. So separate table constructed for each valid entity in an REA integrated diagram. Primary key should logically and uniquely define the non-key attributes in the table, and the degree of association between tables determines how foreign keys are assigned. So this is an REA diagram of a purchases and cash disbursements procedure. So just kind of look at it, go through it, hit pause. And this is an REA diagram of payroll procedures. This is an integrated REA. Normalized tables. Assignment of primary keys and attributes to relational tables must always comply with normalization rules. One or more anomalies will exist in tables that are not normalized to the third normal form. Tables in the third normal form will be free of anomalies and meet two conditions. So what are these conditions? All non-key attributes will be wholly and uniquely dependent on the primary key. None of the non-key attributes will be dependent on or defined by other non-key attributes. And the databases are not static. As things arise, you can change the tables as necessary.